another Kali Tutors tutorial session. In this tutorial session, we'll be focusing on FAC1501 assignment number 1 questions. If you are new to our YouTube channel, please subscribe to get access to the latest public videos the moment that we upload them. If you'd like to access private content, please click on the join button. Without wasting your time, let us look at some of the questions from assignment 1. So question 1 reads as follows. Mehua Florist is situated in the Western Cape. The business is not a registered VAT vendor and makes use of the perpetual inventory system. Please note that at this point, you don't have to worry about whether they are using a perpetual inventory system or a periodic inventory system. During the month of January 2024, Mehua Florist maintained an unfavorable bank balance. Okay, so whenever they mention that they have an unfavorable bank balance, they mean that they have a negative balance in the bank. Okay, so whatever bank transaction that they make, they'll be increasing their overdraft. Okay, and you must remember that overdraft is a liability. Okay, on 15 January 2024, the bank statement of Mehua Florist reflected a debit order for the monthly building insurance of 1,990. Okay, you need to take into account that this debit order increases their overdraft. Okay, so the instruction reads as follows. Complete the table below by selecting the account to be debited, the account to be credited, and the element affected on the statement of financial position from the drop-down menu and filling in the applicable amounts in the correct spaces. Please indicate whether the transaction increases or decreases the affected element in the amount column. Okay, so if it decreases the affected element, we use a negative sign. If it increases the affected element, we do not use any sign. Okay, so given this statement, let us identify the accounts that are affected. Okay, the first one, in this case, they told us that the bank was affected. Okay, and they also told us that the money went to insurance. Okay, so these are the two accounts that we need to search for in that table. Okay, so let us look at our table. Okay, so firstly, let's search for bank overdraft. Okay, as you can see, bank overdraft is here, and these here are actually liabilities. Okay, let us now search for insurance. Okay, so insurance is an expense. Okay, and it's here. So whenever you pay your insurance, that affects your equity. Okay, so we know that the elements that are affected is equity. To be more specific, under expenses. Okay, and the other element that is affected is liabilities. Okay, so if we check the drop down menu and they only have assets, equity, and liabilities, we will select equity in terms of the elements that is being affected. Okay, but if they have all 5 elements of the financial statements, we need to be more specific, and in that case we will include the expenses. Okay, so let us go back to the previous slide and try to answer the question. Okay, from what we have just discussed now, you should be in a position to identify which account to be debited and which account to be credited. Remember, we said when we pay off expenses, we debit that expense account. Okay, so in this case, let us look at the account to be credited from the drop down menu. Okay, so as you can see, we have insurance here, so we'll be paying off insurance, which is an expense account. Then we debit that. Okay, and then the type of element, in this case, we know that this is an expense. Then you select expense. Okay, so in terms of the account to be credited, in this case, the money comes from the bank. Remember, it is a bank overdraft. Okay, so instead of having the bank as an asset, in this case it is a liability. Okay, so this is what is going to happen. In terms of the insurance amount, we are going to write minus 1,910 rands. Okay, 0.00. Okay, but in terms of our liabilities, we know that our liabilities will increase. So we'll just write a positive 1,990. Okay. So if you're not sure about the signs, please always remember the accounting equation. So if we look at our accounting equation, you'll notice that both this insurance expense and our liabilities are on one side. Okay. So we should expect that one of them is positive and the other one is negative. So we are done with this question.